It is the penultimate trading session of the week. The global markets are currently sulking, so it's an important day for our own markets as well. You're watching Power Breakfast here on CNBC TV 18 in the Mumbai News Centre. I'm Hormas Patakia and with me is Vamakshi Dhoria. Vamakshi, good morning. The weekend is almost at the cusp now, so 2 more sessions to go, but 2 very important sessions that lie ahead.
Well, absolutely, Hormas. Yesterday's session was nothing short of a tug-of-war, and today, given the kind of developments we have globally, both positives, especially on the US-China trade deal, but the negatives with the rising Middle East tensions, you'll have to see what way the market goes. Let's get started with the top headlines. Stocks on Wall Street end Wednesday's trading session flat to marginally lower. The move comes after US consumer prices rose less than expected in May at 0.1%.
Stocks in the Asia Pacific are mixed as investors are assessing Donald Trump's quote-unquote done trade deal with China. The GIFT Nifty is indicating a slightly lower start for our own markets as well.
Crude oil prices tick up on worries of escalating US and Iran tensions. This as President Donald Trump said US personnel were being moved out of West Asia. Gold prices too rise on the back of cooler than expected inflation report.
The US and China have agreed on a framework to get the trade truce back on track after 2 days of negotiations in London. The US President Donald Trump has said a deal is done with China subject to approvals, also claims that China will supply the necessary rare earth magnets up front.
And the central government reduces the basic custom duty on major imported crude edible oils from 20% to 10% in a bid to tackle the rising edible oil prices.
It's a mixed picture that is emerging from the Asia Pacific right now, but the Dow futures are the ones that are sulking as we speak. The 200 points lower now on the Dow futures, and that is having a slight rub-off effect on the Asian screen as well. The Taiwanese index is down around 0.5%. The Hang Seng has opened almost 0.75% lower this morning. Similar sort of losses coming in from the Nikkei in Japan as well. The Shanghai Composite in China has opened below the flat line, 0.2% lower. The only outperformer, unsurprisingly at that, is South Korea. The Kospi still in the green, 0.5% higher there as well. So it's continuing its outperformance, extending its greening streak all through the week now. So it's a mixed picture that is emerging from the Asia Pacific screen, largely in the red. But pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Well, consolidation likely to continue. At least that's what the implied open is suggesting, a 14-point downtake, Vamakshi. So it's an important expiry session as well, 25,200 being a barrier. We'll talk more about that, but it was a volatile session on Wall Street as well.
Well, absolutely, Hormas. In the US market, Wall Street ended marginally lower, snapping its 3-day winning streak despite the US-China trade deal and softer than expected inflation data. The S&P 500 lost 0.27%, while the Nasdaq ended 0.5% lower, and the Dow Jones ended almost at the same levels as the previous close. Let's in fact go across to Rick Santelli of CNBC for the roundup of the inflation data.
On the headline number, expected up 0.2 comes in on the light side, up 0.1%. That follows, at least for now, unrevised up 0.2. Up 0.1 will be the lightest since it was minus 0.1 in March of this year. If you strip out the all-important food and energy, it remains up 0.1%. That's 0.2 lighter than we were expecting, 0.1 lighter than the rear view mirror. Up 0.1 equals where we were in March of this year. To find a lower number, you're going to 0, which was January of 21. Now let's take the year-over-year perspective. Expecting year-over-year headline up 2.4, and it arrives exactly up 2.4. That is 0.1 hotter than our last look at 2.3. It equals the 2.4 in March. 2.8 was February. That's the higher number we're comping to. Finally, if we go year-over-year core ex food and energy, it's up 2.8, 0.1 lighter than we were expecting, equals where we were last month. 2.8 actually now is third consecutive month in a row. If you want a smaller number than that, you're going all the way back to March of 21 when it was up 1.6. Now, I always like to look at the indices. These indices go back quite a ways. If you look at CPI headline indice. It goes back to 1913, and the number today, 321.465, might not mean anything to viewers intrinsically, but it is the highest level on this index ever, going back to 1913. That should mean something. And if we strip out the all-important food and energy, it comes in at 326.854. Once again, this number started out in 1957 on the core. It's never been higher.
Getting you the latest on US President Donald Trump related developments. We have Dia joining in our special segment, Trump Watch.
President Donald Trump said a trade framework with China has been completed, with Beijing supplying rare earths and magnets upfront and the U.S. allowing Chinese students into its colleges and universities. The U.S. and China will maintain tariffs at their current lower levels following the two nations' agreement this week in London, Trump said Wednesday. He also said he intended to send letters to trading partners in the next 1 to 2 weeks, setting unilateral tariff rates ahead of a July 9 deadline to reimpose higher duties on dozens of economies.
We made a great deal with China. We're very happy with it. We have everything we need, and we're going to do very well with it, and hopefully they are too. But we're dealing with Japan, we're dealing with South Korea, we're dealing with a lot of them. We're dealing with about 15 countries, but as you know, we have about 150 plus, and you can't do that. So we're going to be sending letters out in about a week and a half, 2 weeks, to countries, telling them what the deal is, like I did with EU.
In response to the inflation report that came in for the month of May, Trump ramped up pressure on the Federal Reserve, demanding a full-point interest rate cut. Taking to Truth Social, Trump argued that the country would pay much less interest on debt coming due and overlooking that lower interest rates usually increase consumer prices. And as diplomatic and economic deals unfold, tensions remain high in the U.S. The White House responded firmly to intensifying protests over immigration policies, stating that President Trump will not allow mob rule in America. The statement follows a military-supported crackdown in Los Angeles. Shifting focus to foreign policy, Trump voiced diminished optimism regarding a nuclear agreement with Iran. In a podcast aired Wednesday, he admitted being less confident than he was months ago about reaching a deal. And moving on to the Trump-Musk feud, a call from two top White House officials may have prompted Elon Musk to soften his stance toward Donald Trump following months of public tension. Reports suggest Vice President J.D. Vance and Chief of Staff Susie Wiles spoke with Elon Musk. The White House said on Wednesday that U.S. President Trump is appreciative of Elon Musk's expression of regret over some of his recent criticism in their blazing public falling out.
Well, thank you so much, Dia, for all of those updates. But moving on then, Commerce Secretary Howard Lutnick told CNBC that U.S. tariffs on Chinese imports will not change from their current levels. Let's listen in.
These numbers, these tariff levels are not going to change from here. Can we say that?
You can definitely say that.
Contradictory reports coming in from the US with regards to developments on that trade negotiations. And that is the reason why the Dow futures are currently sulking. Take a short break. We'll tell you how will all of these overnight cues impact our own markets on the other side with Power Prep. Stay tuned.
Welcome back. You're watching Power Breakfast on CNBC TV 18. We covered all the global and overnight action, but we now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, we have Vivek joining us to get us all the market cues we need to watch out for in today's trading session. Good morning, Vivek. Yesterday was a tug of war. What does today's session hold?
That's right. Good morning. Yesterday, clearly, all the tug of war between the bulls and the bears. Today, you're looking like a slightly subdued set of cues, especially as far as international markets are concerned. All U.S. indices ended mildly with cuts, and the other significant, trigger was oil prices. Oil prices yesterday surged almost 4%, and Brent closed closer to the $69.8 a barrel mark. Indian markets yesterday, like you mentioned, the benchmarks managed to outperform the broad end of the markets and Nifty managing to inch higher for the sixth straight session. However, the Nifty Bank, Mid-Cap, all of them did see significant profit booking come about. What actually was the story of yesterday? It was clearly the liquor stocks, given the fact that there was a significant hike as far as excise duty was concerned in Maharashtra. All of the stocks saw significant outsized moves, and United Spirits amongst the key laggards in yesterday's trading session. The other set of stocks that did see pressure coming about, number one were both BSE as well as MCX. Options volumes coming down. IEX on the back of the news flow that came in. Our colleague Abhiman yesterday reported that there could be market coupling coming about, and that too saw significant selling pressure yesterday. Oil and gas stocks across both upstream as well as downstream did outperform in yesterday's trading session. Asian markets, GIFT Nifty, all indicating a muted start for our markets today.
Muted start indeed. Vivek, thanks a lot for that. And Vivek mentioned IEX. The stock has entered the FNO band today. So keep an eye out on that. Over to Upasana now, who would list out the stocks that you need to keep an eye out for other than IEX. Upasana, good morning. What's on your list?
Good morning. First up, let me start with Zydus Life. The company gets establishment inspection report from US FDA for API manufacturing facility at Ankleshwar. Next is Sterlite Tech and Dilip Buildcon. Both these companies signed MOU with BSNL for 2,631 crore telecom project under BharatNet for Jammu and Kashmir and Ladakh telecom circles. Next is MCX. NSE gets SEBI note to launch electricity futures. Next is RailTel Corp. The company has received work order from Southeastern Coalfields worth nearly about 12 crores. Next is AWL Agri, Patanjali, Godrej Agrovet. All these counters will be in focus as government cuts import duty on crude edible oil and increases differential between crude and refined oils. Next on our radar is MapMy India. Mind you that the block deal is launched in this company, and PhonePe private to sell about 50% of the equity in the company, and the floor price is at 1,750 per share, and block deal size is nearly about 476 crores. And lastly, SEPC will also be in focus as company has received LOA worth 650 crore for Parmeshi Urja Limited, Kolkata, for a solar power project located in Maharashtra. So all in all these stocks will be on our radar today.
Lots of stocks to watch out for in today's trading session. Thank you so much for that, Upasana. And finally, we now have Sudarshan joining in with cues from the FNO space. Expiry day, Sudarshan.
Good morning, Vamakshi. So talking first about yesterday's session, it was another day of range-bound trade, but good part was Nifty managed to hold on to levels for 25,100, while mid-cap index closed in the red. But again, here also market breadth was still in favor of advance. For today also, GIFT Nifty is indicating a start with minor cuts. On the flows front, in the cash market, FIs have sold more than rupees 400 crore, but it was offset by DIs, which have bought more than rupees 1,500 crore. And the data on derivative front is looking healthy even today. In the index futures, we have seen FIs buying more than rupees 1,200 crore. They have added long positions of more than 3,500 contracts. At the same time, they have reduced short positions by almost 3,000 contracts. And now FI long exposure has increased to 22%. Now coming to the option front, 25,100 call has seen basically have seen shedding of 24 lakh shares, while 25,250 call has seen addition of more than 19 lakh shares. On the put front also, the action was above 25,100. 25,200 put has seen addition of 32 lakh shares, and 25,100 put has seen addition of more than 25 lakh shares. Now support, it remains around 24,850, that is also 20-day moving average, and resistance remains around 25,230, that is the recent high. Total 8 stocks are in the band, and new entrants are CDSL and IEX.
Both of them saw profit booking yesterday. Of course, IEX fell because of a news trigger. Just mentioning entering the FNO band today. Sudarshan, thanks a lot for that. But Upasana was just mentioning a few minutes ago about Patanjali Foods, Marico, Godrej Agrovet, and they are in focus today. That's because the central government has reduced the basic customs duty on major imported crude edible oils, including sunflower, soya bean, and palm oils from 20% to 10%. Now, this reduction aims to tackle the rising edible oil prices triggered by the duty hike in September last year and simultaneous increases in global market rates. So, we'll keep an eye out on all of these names. We take a short break on that note. Up next, we get to cues from the commodities market. Stay tuned.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Well, in a bid to crack down on cyber frauds, market regulator SEBI has launched new validated UPI handles for secured payments by investors. Addressing a press conference in Mumbai, SEBI chairperson Tuhin Kanta Pandey said that there were concerns over people falling prey to cyber frauds. Pandey said that the check tool, which would be available from October 1st, will allow investors to check if the UPI account belongs to a verified broker. Listen in.
The issue that we are going to have on a much wider systemic scale, which is the payment system itself, where we are bringing in a new UPI within the UPI system, and you have seen how it will help in knowing for you to know, and you can check up on any bank account whether it is a bank account of the registered inventory, either broker or mutual fund. You should be able to check it. So this would be very handy, and going forward, as we will see, it will be implemented from 1st of October.
The SEBI chairperson there with an important announcement, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil is back on the boil, $70 for Brent.
Oh, well, absolutely. A 5% of gains in the overnight markets, and it has been gaining for a couple of weeks now. And with that, we are trading at a 2-month highs at this point in time. The Brent is trading at 2-month highs, but the U.S. crude oil prices also are trading at a 10-week highs right now. Well, it has to do with the rising tensions between U.S. and Iran. Also, the U.S. and China trade negotiations progress is supporting prices. And the third important thing is the U.S. crude inventory is declining by 3.6 million barrels in the previous week versus the expectation of 2 million barrels. Well, that has been supportive as well. The other gain really has come in for the gold prices. The easing of softer than expected U.S. consumer inflation data has led to a decline in the dollar index, which is now trading below 98.5. That in turn seems to be supporting gold and some of these other base metal prices also.
Well, all on the boil, and gold continues to glitter. That's all we have on this edition of Power Breakfast. Don't go anywhere because Bazaar Morning Call comes up next.